Over the past few years, one of the most impressive growth stories has been the rise of ETFs, or exchange-traded funds. Now, an ETF, it's an investment fund that's traded on stock exchanges like stocks. An ETF holds assets such as stocks, commodities, bonds, and trades at approximately the same price as the net asset value of its underlying assets over the course of the trading day. And with the growing popularity among investors, the number of available ETFs has really expanded. There are now over 1,900 available ETFs on the market. You can find them based on major market index products, different market sectors, commodities, and currencies. And this really gives traders a quick way to diversify their investments. And even more so, one of the more exciting developments in the world of ETFs has been the creation of the ProShares products. And these are products that allow traders to take a bearish stance on the markets while actually buying an ETF. These products follow the price of various market indexes and sectors, but with an inverse price relationship. As markets go down, the inverse products go up in value. And this gives traders with retirement accounts, which are usually limited to the buy side of the market, the ability to take a short position by actually buying a product. ProShares also offer leveraged ETFs. Now, these are products that follow the prices of index products and sectors, but they move at a 2-to-1 ratio of the underlying. And this allows traders to make more money quickly with a small move in the markets. So with such a large universe of ETFs, it can be really difficult to know which ones are good candidates to trade. We've gone through and documented some of the favorites that we have to trade. And let's be honest, it does take a lot of time and knowledge to put a list like this together, so be warned. Number one, looking for some basic criteria when analyzing the universe of ETFs. The items that we look for are liquidity, good range, and optionable products. Second, you want to make sure the products that are traded have good volumes. Some of the newer ETFs have very low volume, which can make them difficult. And at a minimum, we want to see an average daily volume of 250,000 shares. Third, we want to take a look at the charts to make sure that you're trading products that move. And you don't want to trade an ETF that only makes a few decent moves each year. And since we at Netpicks like to trade options, we want to make sure you're looking at products that have liquid options. And for that, we want an open interest of at least 300 contracts across the strikes that we're looking to trade. In this chart here, we've created a broad list of ETFs that track different indexes, sectors, commodities, and currencies that can be used as a sample watch list. Now, this exchange traded funds list was created with the active trader in mind. We're trying to capture the short-term swings in these products. Average holding time for a position on these products is about 3 days out to 3 weeks. And if you combine these short-term moves with some basic option strategies, it's very possible to see returns of over 100%. Now, there's an easier way to find the best ETFs for you to trade, because it can take a lot of work for you to narrow down the list of available ETFs to a specific list of names that you can reference throughout the year as different markets and sectors heat up and they cool down. You need a systematic approach to doing that, and to ensure that you've covered all the available details, that you're trading viable exchange traded fund names. So to help with this really time-consuming task, what about piggybacking on our ETF research? Marc Silverman is the Netpicks owner. He was spending a large chunk of change having someone manage his investment income. Whether he was up or down in returns, the fees would still apply. Well, Marc ended up firing his money manager and he took over the task himself. And he's already eclipsed the returns the investing professional served up while saving money on his fees. Now, while Netpicks is geared to help the individual to be an active trader for income, Marc thought that Netpicks should take a strong stance towards a vital long-term portfolio management that's designed to take our later years and make those stress-free. Now, the numbers don't lie. Over 25 million seniors in the United States are economically insecure. So in the words of Marc, hundreds of millions are spent every year on management fees for returns that do nothing to secure the financial future of people like you and I. And with those words, the Netpicks ETF Investor was born. Now, the Netpicks ETF Investor, it strives to teach you how to empower yourself to manage your long-term portfolio. Using low-cost exchange-traded funds and allocating your capital to the best sectors is the objective. Nobody has more of an interest in your future than you do. So why would you leave it in the hands of someone who gets paid even if you have negative returns? The truth is that you could probably do a better job of managing your money than the professionals can. So Marc has made it his mission to help people break away from the money managers who just make their living on the backs of people like you, whether they lose your money or not. And he's extended a special invite to use the exact research and analysis he successfully uses internally at no cost. You can visit the Netpicks ETF Investor, enter your email address, and you just get on the road to taking your own future into your hands. Thank you for watching this video, and it'd be great if you could hit the like button below and take a moment to subscribe here to the right. You can also enjoy this other video that we've chosen especially for you.